Oliver Sloup, Blue Line Futures. What do you think of this Chicago wheat market? This caught a couple of folks I've talked to today a little bit off guard that we saw such a surge of strength here.
Yeah, it caught me off guard for sure. I was one of them, especially with the way that corn and soybeans were trading. I thought they'd all just kind of trade in tandem. But if you look back, I mean, the Chicago wheat contract has really just been leading the way lower for the last several months. So I think this is just a little bit of a relief rally. The bears are still in full control of the chart. If you zoom things out a little bit, you can see that we've been consistently making lower lows and lower highs, but it feels like we're starting to build or carve out a bit of a near-term low here. Bulls need to get some consecutive closes out above technical resistance for that July contract. We're looking at 491.75 to 494. That was the previous lows and the secondary breakdown point. If we can stabilize above there, potentially we get a little bit of short cover and get us up back towards that psychologically significant $5 handle. But from there, I think it's going to be a bit of a battle. I think the surprising thing with the wheat trading up significantly today is the fact that corn couldn't get any tailwind on the back of that, and we just had a big technical breakdown. And if you look on the chart, I think we talked about it on Monday on your guys' show in the morning session about kind of drifting off and making lower highs last week and lower lows on Monday night. And that really rounded things out. We had a breakdown below 323, 325 in July, and that really opened the floodgates for some accelerated selling. We do have option expiration tomorrow. Hopefully that can offer a little bit of support going into the weekend, but the fundamental headwinds ahead of us, I think, are going to keep any significant upward prices limited.
Were you surprised to see us recover and bounce off of some of these earlier lows that we set here in the day on some of these contracts?
Beans has come off really well off of those lows. 857 to 861.25 for that July contract was the previous top end of the range, previous resistance, now acting as support. It held perfectly today. Pivot point at 869.5 is really what the Bulls want to see a conviction close out above. If they can do that, potentially we work back towards the top end of the range, which really isn't all that far away, 877 to 882. But again, we do have option expiration tomorrow for July options. That will play a role into things. And then once we get past July option expiration, that volume is going to start to dwindle in July contracts, and you're going to want to look to the deferred months going forward into next week's trade.